are in listen-only mode.
Okay, traders, welcome. It's Jamie Saettele here with the Midweek Strategy Webinar for April 29th, 2015. We're going to get started here. Obviously, what a difference a week makes, or several weeks for that matter. One thing I want to concentrate on here today specifically is, this U.S. dollar breakdown and how to get position from it here, okay, and what kind of to expect moving forward. So, if you're worried that you've missed, the dollar decline or something, then don't worry, man. We are making, this is a monthly chart, okay? I know it's a big long-term chart, but monthly chart, and we are just now making, this is obviously the end of the month tomorrow. So we're making an outside month reversal here. And really the next big support, you've got a while, okay? So there's going to be plenty of opportunity here to get involved on the short dollar side, with tight risk, tight stops, in my opinion. Or there'll be good setups that'll allow that to happen at least. If we switch to the weekly view, again, this is the U.S. dollar index. It's a great indicator to look at because it's, consists of the four big currencies that are traded against it, which is euro, pound, yen, and Aussie. So, for our purposes, it's great. It's a great tool. I want to show, this is the weekly chart, the same fork, but with some more slope on it. In other words, you've got lines that extend from previous inflection points that exhibit that same slope, okay? And we're actually at one now, okay, interestingly. This one goes off the January 16th low here, the mid-month low, and it originates back in back at a high back in August 2013. Okay, so you could get a relief rally here, actually, which, wouldn't be all that surprising, considering that we're already, down testing. I think we've actually, today's low might be a couple points. What's that? A couple points above, yeah, like 3 points above the low from, what's that? From February, actually. So, we're coming into a level that horizontally, as well as slope-wise, that could very well provide us with some sort of a, of a rebound. And we'll keep going down in time frames here. If I look at, say, the daily chart now, right, and then we went monthly, weekly here, and now we got daily. And, just yesterday, right, we've got the slopes on here that we've been watching for some time. In fact, this one, which contained price forever, was quite an indication, right, of a big behavior change here. We did bounce here. We were looking for a retest maybe up here on the upper parallel. Instead, the market decided to fall apart right away. But because of that, we're actually, what I think what we're doing here is we're probably nearing the end of a third wave. Okay, and again, count with me, just 1, 2, 3. Okay, now the double top target comes in at 10.6, around 10.630, okay, which would actually intersect the lower parallel some point late next Friday, on NFP Friday it would. So, you might want to keep that in the back of your mind. But if we're coming into the end of a third wave, as things kind of reach fever pitch here on the short-term charts, as far as emotions are concerned, right? Dollar weakness, 6th day of a decline, right? We haven't had that in a really long time, actually. In fact, we'll take a look and see the last time we had 6 down days, consecutive down days, 6. Okay. You'll see it pretty well. Okay, so way back here, February of 2000, February last year, we had 1, 2, 6, 7, 8, 9. We had actually 10 down days in a row. Let's see. Before then, we had, this was a really sharp decline. August of 2013, we had 6, and then we had a pretty good rally. So it's obviously a rare occurrence to get 6 down days. And before that, got to go back pretty far. 2012, 6 bounce, and then or 7 a bounce decline, 10 a bounce and decline. So the number 6 doesn't seem to be all that special. It's just interesting to note because it has been pretty rare. Okay, as far as the consecutive down days is concerned. All right, so what you want to do here again, I'm not really changing at this point. I don't think it's really necessary to change the, kind of yesterday's strategy, right? If I can find here the last night's post. So the dollar daily, right? We talked about the median line triggers a breakdown focused on the lower parallel. So that's still the case, obviously. Last week with dollar CAD, we had the zoom and retest. I'm going to start just calling it a ZRT rather than writing it out. So you know what I'm talking about. But the ZRT is, you get that decline below the median line, right? And it's especially useful when it's a median line like this one. It's been touched a lot and was support, okay? And, fairly recently it was support, actually, on April 17th. So with dollar CAD, we had a very similar instance, right? Same thing. We had a decline on Thursday, decline on a Friday, but a reversal. We ended up testing it the next Tuesday, so the zoom and retest. Okay, you could certainly see something similar in this instance here. Okay, with the dollar in general. Dollar CAD, by the way, itself is actually getting really close to this lower parallel. So you could have something quite similar. Obviously, 6 days down into a Fed meeting. I have no clue what they're going to say. It's not really my concern. How the market reacts should be awfully interesting. It obviously sets up pretty well for some sort of capitulation on the downside. If the Fed comes out and the dollar absolutely gets smoked even more so than it is now, then, all the way down here, 10.690 is where this is today. I would watch the lower parallel for support, okay? But regardless of when or if this thing, or I say regardless of when, any rebound, you're going to want to look for this to provide resistance, okay, the median line. And if we look at it from, we'll go down even further now. We'll go to a 4-hour chart. You can see if we go, 1, 2, working on a third here, right? Third wave down. At some point, when there is a fourth wave recovery, you're going to want to look for it to, to come back into a former fourth wave, which very well might be here. And we're actually, it looks like, well, we're seeing it. This is only an hourly chart. That's why when you have big market, the market moving on like this, you kind of get really screwed up by looking at short-term charts. We don't have, the markets are moving enough. We don't need to be looking at all these short-term charts, in my opinion. But we've got, former fourth wave stuff, 11.812, 11.830. So that is going to become, kind of resistance to look for, okay, over the next few days. And maybe it happens next week, maybe it happens tomorrow. It's obviously you don't know the future, what it holds. You can just kind of look for levels that, to act if you, if they're reached. And remember, this was, if we go back to how we were looking to play this, we were looking for a few things, right? The dollar breakdown, we had the behavior change here, we had a bounce here. We were looking to get, a test up here or on the lower parallel and then put on the big dollar short position. Didn't happen, so, the other scenario is coming true right now, and that is the break below the median line and then look for the retest, okay? It's all about, breaks, retest, et cetera, et cetera. So there's still going to be plenty of opportunity, to play dollar weakness here moving forward. All right. Okay. Just concentrate on that median line. It's really the best kind of thing I can say, or the best, the best advice I can give at this point. So out of the, the dollar pairs that are comprised or that make up this U.S. dollar, the four, again, euro, pound, yen, and Aussie, which ones look the best? Well, I still think euro actually looks the best, and let's take a look. All right, so again, the chart from last night, which is this one. Interesting little dollar reversal there, it seems, huh? But the chart that I think looks the best is the euro, and obviously, we're not. I'd be shocked. I don't think it's going to happen at this point. If we ended up getting, 109.05, 109.20, don't think that's going to happen. But if it did, that'd be pretty absurd. So at this point, what you want to look for, again, even a shorter term zoom and retest type of trigger, okay? And again, let's go to the daily chart because we'll focus on some longer term stuff here. We've got the potential for some huge, big ass moves, and I don't want to be concentrating on, hourly charts when we're talking about swings of a couple hundred pips. Sandeep actually has a really good question. Jamie, I've seen seasonal performance of the dollar turns bullish in the month of May. Does that carry any importance? Very interesting that you asked that. It depends on what currency you're looking at because, look, sometimes seasonals work, sometimes they don't, all right? It's, it's obvious, okay, I get it. But when they haven't been working especially well, sometimes you don't necessarily want to pay a lot of attention to it. And recently it hasn't necessarily been the case. I'll go over a little bit of that towards the end. If things get really capitulation crazy here in the near term, then yeah, we'll look for on the lower parallel on the dollar. You'd be looking for dollar long anyway. But median line, downtrend, breakdown, dollar short into that median line. Like I just said, lower parallel, etc. You want to look for dollar support. Okay, so here's the euro again, long-term chart, monthly. I want to keep it real. And understand the big picture. You know how I give you guys the scans, right, which have extended decline, extended advance? Well, check this out. So 9 to 11, so it's 11 minus 11. Okay, so we've actually only had the dollar. This is a monthly chart. So the euro has only been extended on the downside to this extent once in history, and it was here. It's actually the all-time low. So look, the euro is going to have plenty of upside here. Okay. In fact, the next level I would be looking at on a bigger picture probably wouldn't be up until above 115 at this point. Which is going to be the February high, as well as you got median line intersects there, well, over the next few months, depends where it is, could be a little higher. So again, on what I was speaking about earlier, there's going to be plenty of opportunities to get on the dollar short train, right? The key is getting it with the right amount of risk. When we look at the weekly chart, the level that we're coming into actually that could provide resistance for the dollar, support for the dollar, resistance for the euro, is actually right here, okay? And that's about 112.70, okay? And that's a level that we talked about anyway recently, which is a support back in February, 112.69. Okay, now what you're going to be interested in, what I am interested in right now, is obviously getting getting position for this. Mark says you sound excited. Hell yeah, brother, I'm excited. You know it. We got we're getting into this is the type of trading that you can really do well. I know people are probably worried that they're missing these moves, but do not worry. There's plenty more where this came from. Okay, so if I put on, we got two slopes. Or let's back up a bit. We've got longer term slope, right? And we've been following this forever. I put these charts up every weekend, right? And made no bones about it that once we broke the red line here, okay, which is the sliding, it was basically the bull bear dividing line. Once we broke that line, okay, the key was, that was the key to the bearish argument. And once we broke that line, we're going higher. Okay, and sure enough, we broke it a couple days ago, and here we go, off to the races. We actually broke it on Monday. So at this point, you do have, again, ZRT, Zoom retest. We're testing the median line and the upper parallel from a short-term one. The short-term one that we've just broken recently, that becomes support now. Okay, so if it's happens today, which would be nuts, I don't think that's going to happen, but you want to look for support. That median line actually does intersect former, the highs that we just broke, 110.55 or 110.51 and 110.35. Okay, April highs here as well as a March high. That does intersect back here. Okay, in what's that, tomorrow, right about 110.45 or so. So that's an area that you're going to want to look for support. And I say, how to get involved in this, like where would you put your stop? There's no need for a very big stop if you do something like this. Let's go to here's the hourly chart. Okay. You wouldn't need, this is the daily low right here, 109.59. You don't need to put your stop there. You put it here, okay, which is 109.84, okay? So you'd be looking to buy this line or perhaps slightly above it, perhaps buying on the sliding parallel, which was, okay, which was resistance here and here, okay? So on the hourly chart, what's this? This is, so during European hours tomorrow, which, I would like to see where they are during, because it's, obviously you'll get more activity then, but, during 3, 4, 5 o'clock in the morning, this looks to be about, 110.55, 110.60 or so. Might be an area to put an order in. Obviously want to see what happens here with FOMC. But yeah, you don't need that big of a stop. I mean, if you can get 110.55 with a 109.80 stop, I mean, it's a 75 pip stop. But look, we're talking about upside. The next upside, I should say, probably about 112.70, maybe slightly lower, 112.25. Confluence early next week, 112.30 as a first target. See if you can hold on to the rest if it's a runner. But yeah, this is how we're going to want to get involved with with the euro long, right? And I think it's instructive too to look at, like I said, with this with how extended things were here. Okay, in the euro on the downside, there's plenty of upside left. Right? I mean, I can envision us trading between, trading up to 115 and getting slammed back down again. I mean, there's going to be all kinds of opportunities here. Okay. All right. So the next one that is going to look awfully interesting as far as the dollar short position is concerned, in my opinion, is probably the Aussie. And again, this was one this is the same chart actually from last night that I published. So we have the raised floor, which did a pretty good job in indicating where there was, or what to expect once we got up here, and we did break out right on the upside. So the idea here still is to buy into this median line. Okay, get rid of that. You can see it. So we're at resistance now. Just traded up into it, slightly above, really. Slightly above that level, 80-60 area, 80-70. If FOMC gives a little bit of a little bit of fake out on the downside, as the dollar's been ripping all day. If you get an initial move down, look for support in Aussie dollar right on the median line, which again today is something along the lines of like 79, 55-ish, 79, 54, 55, what have you. Obviously, you've got the former high here too, which I don't think that'll be reached, but 79.37. And I'll explain why I have the stop where I have it. Here's that median line on a short-term basis, right? So one thing that I actually was expecting, I was kind of thinking that we'd actually make a new high up here before we got down into this median line. So it's kind of going according to plan right now, looking for the smack down into on FOMC. But what you do is, at this point, oops, let's see here. There we go. Okay, so from yesterday's low up until right now, today is the high we have right now. If we were to come down here and test this thing and get us triggered on a long, which would be right into the median line, okay, we'd be expecting us to come down and then retest it and then continue off to the upside. Okay, your stop, which is going to be 79.10, is placed where it is because that 61.8% is 79.25 of the rally, or the decline from yesterday's low, which is right here. An Asian low is 78.30. So, the thinking here, the logic is that, there's no need to risk, say, to all the way to the daily low, which would be a huge stop. There's no need to do that, primarily because this is an impulsive move on the upside, and one, if it is going to continue to stay impulsive, you kind of want to see it hold the median line as mentioned, but you also don't want to be retracing 61.8% of anything, so you just kind of have to get in, okay, and put the stop there. So that's kind of the logic behind that. And again, on where the target is for this, put half the target up here at the year open, right? The other half, though, is up here, and that's all the way. It's in a couple weeks, okay? So that's like the 12th of May, and here's what's cool. So this is, remember we talked about a couple weeks ago, and all throughout recent history, talked about the broadening bottom pattern, right? How difficult it can be to trade, but they give way to really big reversals when they do actually play out and work. In this case, the target is going to be the width of the pattern at its widest point extended from that high. So here's what's cool. That target's 83.42. Okay. So check this out. 83.42. 83.42 happens to intersect on the nose with this upper parallel magenta, which is kind of your target line, and this red line. And if you're wondering where that comes from this daily chart here. So target one is basically this line, which is the year open. Okay, so you can see it right here, like 81.40 this week, 81.30 next week. And then the other one is up here, which is 83.40 area. And this old pitchfork here probably comes into play as resistance at some point now. Okay, so that was resistant. This old fork using these 3 points, but also using again, I'll redraw so you can see what it is I'm talking about. So this fork here, okay, and this is a shift, meaning it's shifted 50%. Now, if you don't have that on MarketScope, but so what you can do is you can just draw the trend line like this. Okay, it's the same thing. Draw the trend line and extend that from the low right here, and you get the same thing. It's a weekly chart. So this line, which is red on the chart, was support, support. Oops, wrong one. Okay, so support, broke down in December, actually. And if we get back to it, I'd expect it to act as resistance, right? Up here, again, 83.40 is where it's at in like two or so weeks. So, don't freak out if we're not long today or tomorrow. There'll still be a couple hundred more pips on the upside, and maybe a little flag or something will do the trick. A little consolidation above the median line, what have you. Name of the game is know your risk, obviously, and that we do with this trading style. All right, so that's what we're looking at with Aussie. Okay, so like Euro, into the same kind of deal, right? Former highs and median line zoom retest in Euro puts us 110.50-ish, okay, with a stop below 109.80, looking towards 112.35 and maybe a little higher. 112.25, 112.70, I should say, maybe a little higher. Aussie dollar, same deal. Look for that retest as laid out last night. Aussie's kind of done the same thing here, as hasn't really done a whole lot today. 79.56 area. Look for that, and then looking at the year open, 81.30 area, and then looking at a couple weeks up here, 83.40. So that's what we're looking for in Aussie. Let's go to pound. Pound's an interesting one because pound's already just got to long-term resistance. Obviously not saying it can't break. Maybe actually this time we end up hitting, we might actually end up going to the median line from the structure. Remember, the sliding parallel is the one that provided resistance back here in February, at the February peak. But if the dollar does extend to the downside a little bit more here over the next few days, as it looks like it's going to do, given the break below the median line, then would expect that we get back towards this median line, which puts us, next week it's at like 56.50. Okay, so pound, it's a screamer, that's for sure. It just broke above its own short-term median line here. That median line is pretty close to the, well, it's right at the open actually. So, keep tabs on that. I don't like the pound as much as I do like the euro on the upside as far as European currencies are concerned, just because the levels here, the pound just is now come into a big level longer term. And when I look at euro pound, it does have that bottoming feel to it. Euro pound, again, if you look at the long-term charts on the weekly or on the website, look at the weekly and the daily and the commentary below it, talked about a level that could provide us with a big low or support would be 71.12, and the low here last week was 71.16, and now we're getting back up into resistance. okay, and eventually, this thing's going to break. So, I think I talked about it last week in last week's webinar, but Euro Pound has a subtle change of behavior here in that the, this median line provided support, okay, outside day reversal here a couple days ago last week. So the median line provided support was a change because on the way down that never happened. Okay, it might provide support for a little bit, but then it was immediately broken. Okay, and it was resistance. But here we've provided support and turned up in front of it. So, Euro Pound and the action in Euro Pound is kind of telling me that Euro Dollar might be even better on the long side than Pound Dollar, and it's probably just a function of the Euro just being totally oversold long term, and obviously the change in behavior, the break of that red line is a big deal for Euro Pound, or for Euro in general. And yeah, I like Euro even better than I like Aussie dollar. And again, Euro Aussie, here we go again, right? Breakdown yesterday, we're right back at it again today. We got a new low today. We're going to have, barring a complete retracement of this rally today, we're going to have a J spike here on Euro Aussie on the daily, and Euro Aussie could go screaming higher too. Okay, in fact, I think it probably does. We look at momentum for Euro Aussie. Again, look at what happened here at the low. Okay, we had a new price low, and this one actually was legit because we had a we had a closing low, I should say, but RSI turned up from right here at 40. What was that? From just below 40. It was at 37 yesterday, right? Those are the kind of divergences that you want to watch for. You don't get a whole lot of these. In fact, hold on. In fact, Euro Aussie. Just want to see where we have the little dots, which are for the divergence. So we have one here. The last one we had before then, not the big ones, but the little ones. We had one here last May. We got a nice pop off of that for a couple days. We have one here, which was awesome for last October 2013. Okay, so yeah, we could be ready for quite a runner on the upside here in Euro Aussie. I mean, it's pretty disgusting, really. The fact that you break this and then today completely retraces it. So, that is basically a false break, and which is a signal in the other direction for Euro Aussie. Okay. All right. Let's see. All right. So I got to do that. Obviously, dollar yen. We're looking towards this level here, 1675 to 1725 this week, 1690. The break-even stop last night, bummer as you have this huge outside day, and the market's now trading slightly below the support level. We'll see what happens from here. I do like, obviously, the downside potential in dollar yen. It can be pretty big, given how it's coiled up here. And the dollar is also, broken its own median line, so it's got its own downtrend effect. So you're kind of going with the wind at your back with dollar yen on the short side. If you do get any sort of pop here on the Fed, then we'll be looking to short again at 1950, okay, up here, whether that's today or tomorrow. I don't really care. It could be, it's just a level that is very well defined. Okay, so 1957 specifically, but just the 1950 area. It's a big zone for dollar yen. Also, watch dollar yen down here. It could be set up for its own. If we do end up breaking, for example, on slope stuff here, you've got, we do have support down here, and you can see it best on the weekly, okay? But we do have support down here, right? What I do want to get across, though, is that you've got a head and shoulders top possible that could very well break right now. And if we do, the target for that is all the way down at 114.60. Okay, so that's a ways away, obviously. Hold on here. 114.60, and this is the daily chart. So if we end up breaking, today, FOMC, then you're going to get 17.15, 17.20 today. It breaks below that, then this line, median line, becomes resistance again. Okay, so dollar yen short side looks really good. But we'll see if it wants to print 1950 or not, or if last night's spike up to 1935 was just, or if that was it. But we'll see. Okay. Got questions here on Kiwi. Raj asked if I'm looking to go enter dollar CAD long on FOMC. No, not really. Like dollar CAD support could come in slightly lower. You've got the lower parallel down here about 1912 today. The bigger support, the one that would actually probably be worthy of looking at a long at some point, probably isn't until about 1770. You've got this low down here. What's that? 115, January 15th. Okay, and that's that's right at 118 actually. 1730 could be even more interesting. We've got that's down here at the lower parallel. And again, if we look at the weekly chart for dollar CAD, you can get a sense for that. So we're into the area of support for like a target on a bullish position or on a bearish position, but we are not into an area where I would necessarily look to go long. For that to happen again, it's slightly lower. It's this area down here. Okay. These areas down here. All right. Up for about 17, what was it? If we can get down here, 1770, maybe even 117.10. At this point, any rebound in dollar CAD, especially if it's down here before the median line, I'd still look for resistance, right? Whether it's up here on this slope or whether it wants to happen over here again on this median line. The name of the game here, until you get complete capitulation down in the U.S. dollar, which I don't think is going to happen in the near term until at least 11.630, okay, which is pretty close to euro being at like 115. I wouldn't be looking for a long dollar position, okay. FOMC, if we get a snapback on that, that'd be great because that should give us a chance to fade it into the mentioned levels that I've been talking about, especially on the euro, which is, I think, the biggest one to go for right now. Oh, yeah, okay, so let's see here. What do we got? Oh, Shintan asking, can you go through Kiwi? Yeah, sure. So Kiwi, kind of being a pain in the butt. Like, we're basically on long-term resistance, but long-term, resistance, support resistance are zones, right? So it doesn't mean that, doesn't mean that we have to turn at the bottom of the zone. We turn at the top of the zone. So the net, Kiwi short's going to be a good position at some point. It might not be until 78.50 for all I know. That's probably going to happen as the dollar comes into its low, its near-term low. So, you've got RB and Z tonight. Look, a lot of things can happen, I guess, but 78.50, top of the zone. We're really at the bottom of the zone now, which is the sliding parallel, which crossed through just a ton of highs back here in October, November, and even in January. So we're not far. We're in the right area, but somehow this short still has survived. It's 77.50 is the stop. It's gone up there like seemingly all day, the last 4 hours, I guess, and hasn't triggered it. But yeah, so if it wants to turn around here and make us lucky, then great. But given the general dollar breakdown, I have a feeling it's probably not going to work out too well. Remember, this trade was put in before the dollar completely broke down. I was still thinking that the dollar could bounce a little bit. That was here, right? That was here. So the dollar was still looking for the dollar to maybe bounce a little bit and consolidate before it went completely nuts on the downside. So far, Kiwi's been weak relative to everything else, right? Or relative to Aussie, relative to Euro, especially. In fact, that's one that I like a lot. Obviously, is the Euro Kiwi position. Talked about that, here's Euro Kiwi slope, big support. Weekly J spike last week. J spike looks like that, right? This is what some of them have looked like over the years. During the screaming downtrend that we had, obviously they're not going to work too well, but once things flatten out, they have worked out pretty well. We got, back, you can see the chart, right? These are the top ones, tops, bottoms, lots of false signals back here in 2008. Some pretty good signals, though, overall. 2005, 2007, 2008. So, I think Kiwi is actually a good thing to look at on the downside. Maybe, maybe not just yet against the dollar. It's probably not going to work out given that we're so close to the stop at this point. But for Euro Kiwi, what was that? 140, 130 support, never got it. For Euro Kiwi, we'll be looking for entry. Well, maybe next week. Maybe 43 will be it. In fact, the weekly reversal level, 143.03. So 143 could end up being the level to get long Euro Kiwi if we get it, right? 143, take it up. So, yeah, and I wouldn't even mess with pound Kiwi at this point because I like the euro so much better. I mean, I talked about euro pound even. Being a slight change in behavior. So, yeah, Euro Kiwi on the upside, pull back into 143 would be great, especially if it happens over the course of a couple days of just some chop, making us maybe like a 1-2-1-2, and then rip it. I'd be looking towards 47 as a first target. All right. All righty. Mark's making jokes here. Grandfather trade euro pound. Yeah. I mean, you're right. There's better stuff out there. I look at the euro pound though because it's a pretty good indication of obviously if you know, if you're going to have better luck on the pound side or the euro side. All right, let's look at. I want to obviously talk about euro crosses. I mean, kind of break my heart a little bit, obviously. Actually, you know, because we called the low in euro yen and pound yen. Never put any orders in for you guys, but you know, again, we're coming up on some interesting levels. Euro yen's broken this median line to the downside, so we're in the middle of it now. What you want to look for is for you want to look for resistance and support both. Okay. Well, so you could pull off a little bit here in euro yen. Basically, you want to look for support now at like 130.50. Okay, which is right here. This is a weekly chart. You can see how looking at the weekly charts is so much better sometimes, especially when the markets are active, because you don't you're not like trying to figure out like, you know, if this thing's gonna like pull off and go to this little small you're looking for the big levels, right? These are the big levels you can really trade on. And at this point, you know, you're going to look at this median line as a level that provides support. It was resistance, and we're talking like 130.50, 130.40 if it happens next week. And then this is resistance up here, so support down here, resistance up here. You know, at this point could be above 134, above 134.50 even, given that you've got, you know, given that you've got, you know, the upper parallel slightly higher. Okay. Looking at the daily chart. Daily chart, you might want to look for support at, it's just like the euro actually. Euro dollar, euro yen is very much like euro at this point. Again, I like euro dollar better, especially with the potential for euro yen to get, or for dollar yen to get smacked lower. So would be focusing more on euro dollar, but the chart's the chart, and I do want to show it. You know, do have a median line here, crosses through, you know, a number of pretty good levels. I mean, you got the low here from January, and then the recovery high actually in March. So we're at that level now. You know, if you're bent on trading euro yen, you know, then basically watch for support at 130.140, former resistance. Look for it to be support now. Okay. Pound yen's the one that's really interesting from a charting perspective, though, given, remember this chart from the 14th? This was the long-term slope, and 3 weeks later, here we are. So there's a couple things to watch here. Obviously, we're coming up on this is you know, a slope that I would watch. Okay, right here. We did find support on that median line. If you look at the bullish slope here, we're already at that level. Okay. If you look at retracements, we actually just nailed the 61.8 today at 184, and we pulled off about 60 pips today. Okay, so pound yen is in an interesting spot as far as, you know, maybe time to take a breather, you know, or at least put up a fight as far as the other side's concerned. And again, that most of that's probably going to be, if it does happen, it's more than likely going to be because not because of anything the pound really does, but probably more so what the yen does at this point, in my opinion. I mean, you know, dollar yen flashes, you know, warning signs, and it could break down. If it does break down, then, you know, good night. You know, yen crosses. You know, even if euro and pound both rally, you know, yen might make up for lost time here and fall a little bit out of bed. So we're at really interesting levels for pound yen and euro yen on these weekly and daily charts. Okay, love the weeklies. I mean, they just really stick out the levels. real clean. I mean, when things are choppy and whatnot, then I guess you want to look at dailies and shorter term stuff, of course. Okay. All right. All right. So I'm going to end it there. Again, biggest takeaway, obviously, the U.S. dollar breakdown, right? We got specific things that we want to watch for. Capitulation could happen down here, okay, at the lower parallel. If Fed comes out and they destroy the dollar today, then maybe you get support down near 10,690 down here. If they come out and the dollar rallies off of it, then look for resistance all the way up. A full-on reversal would put resistance all the way up here near 11,875. But either way, just whether it happens today or next week, what you want to watch for is resistance from this median line, okay, in U.S. dollar, right? And then when that comes to euro, the euro level, probably about 110.35.50, okay? We're trading up here right now. Where's this level? 112.50 today could be resistance, I guess. But the idea is not to necessarily fade this, but to look for support, because this is a real breakout, right? It's cool to fade into here, whatever, but behavior's changed now. We've broken this red line. That puts us on much more of a bullish euro track. And yeah, I mean, I just can't stress that enough, okay? So any dips viewed as a buying opportunity in euro dollar, all right? First place to look, in my opinion, 110.35, 110.50. All right, there you go. So that's it. Take care. Good luck. We've got, 8 minutes till Fed. There's no press conference or anything like that. This is just a release of a statement and whatnot, so we'll see what happens. All right, guys and gals. All right, thanks a lot. I'm not going to be online much the next 2 days. I'm actually moving, so I'm going to be moving and packing and all that stuff. But obviously, we'll have the updates, to the website as always. But we'll not be really online as far as the Twitter is concerned. Okay. All right. So take care, everyone. Have a great one. Talk to you later. Bye.